Hello, this is John Piper with the weekend video clip, and it's Saturday the 12th of October, and it's also going to be the second part of this month's Technical Trader. We're going to start with a weekly chart of FTSE, which we're seeing here. And interesting, there's a lot going on right now. This line here is the major trend line, which connects the peaks, the 1999 peak and the 2007 peak. And you see it has quite a lot of relevance to what's going on at the moment in here. You also notice this failed break here. We went up towards 7,000, but the market couldn't sustain that and very quickly actually fell back. Let's just widen this chart a bit so we can see what's happening in a bit more detail. Sorry, the line's now vanished, which is one of the problems of 10-4 lines keep vanishing. Anyway, so there is the important trend line. Here is the break above it. You see, very quickly move back to retest. Then plunge down. This is a 5-wave form. Then got this move up to here. Now there's two main alternative counts here which you need to look at quite carefully. Okay, right, I put this line here in to represent this major trend I'm talking about. See the failed break here, straight back down again, retest here, failure again, retest here, failure again. So right now, you know, it's looking, that line is quite dominant, but there are these two counts. The bear case is that we saw 5 waves down here, and that's a clear count. We've got a clear 5 waves down there. And then it's an A, B, C, which is a flat correction. Not a perfect flat, because this high here was not equal to that high there. But it's a valid count, followed by 5 waves down here. Okay, and so a corrective rally, which is still on the cards despite the strength seen so far. And then a big fall down. That's the bear case. Now the alternative case is that this was somehow a correction. Doesn't count whether it's a correction, but it could be a correction. This is a 5-wave advance, so new impulsive action, and that does count that way, can be counted that way. Then A, B, C, and we have, you know, that's a very nice ABC count actually. Waves A and wave C are of equivalent length. And of course now we've got this strong rally coming in. So there are two clear counts there. The spanner in the works for the bull case may be this great big trend line thing around 6.6. We're not there yet. But you know, these two counts are valid on FTSE. I did say when on the day of this low that shorter term traders may want to go long here. That was clearly a good suggestion. And I mean, it was a low risk opportunity because in both counts a rally was due at that point in time. So you know, this rally was a low risk opportunity. It was stronger than I expected it to be. In fact, it was a very strong rally, but it still be correct. So let's now look at the shorter term action here. Right, here is the action since the peak. So I got a 1 to there. 2, 1, 2, 3, 4, 5, 4, 1, 2, 3, 4, 5. So a pretty nice 5-wave count. Third wave a bit messy, but that's okay. Actually much better than the Dow, and certainly the longest wave. Followed by this strong blip up to the 50% retracement level. So it's, you know, it's fast. But the key thing is expiry next week. We've now got just 5 more sessions into expiry, or 4 full sessions, and then expiry comes in on the Friday. So you know, a peak around then would fit quite well. The decline is about 3 weeks, so a week or so of rally, subnormal in terms of time, but would fit in okay. Just depends how it pans out. So the bull case is we're just going to keep on going up, and this is going to make new highs and probably new all-time highs on FTSE. The bear case is we're going to see a massive reversal coming in pretty soon, and 6.6 being this this major trendline resistance, which so far has been pretty effective in turning the market back, is the key, may well be the key level here. But we do need to see some kind of pullback, even if we want to go long. I mean, because if we're going to see a B wave, then you know, that would be a good opportunity to trade the C wave on a short-term basis. So those are the two counts. And yeah, I'd say there's a difference between what you may want to do on a shorter term basis, i.e. you may want to buy this rally for the time being, although expiry is traditionally a quieter period. So next week may be very much a two-way process. but it's what happens around expiry that could be extremely critical. Let's have a look at the Dow now. The Dow also has some dichotomy. If we start from the rally here, there's a 1, 2. Now we can count 3, 4, 5. That's valid. However, we can also count 1, 2, 3. Then there's running triangle as a 4 wave, and then one more high as a 5th wave. So, again, we have a case that we could see another high. It would be a really good shakeout, actually, I think. So that's quite possible. It shouldn't be that. It shouldn't take that much longer. That's, but it could go into the new year. In fact, I mean that's a 2-month rally. So if this is a low in October, then October, November. So we could be looking at January. I think the two major turning points really are the October expiry and the December, January expiries. And it's a question of whether we're going to see that blip up. I mean, we are at that time of year, of course, where the Xmas thing can come in. We're also at the time of year where the October crash thing can come in. So it is a particularly fascinating period right now. Let's go down a scale on this. Okay, this is the Dow daily chart. Shows the new all-time high here. This is a 5-wave decline, but the 3rd wave is a little bit flaky. We discussed that before. I don't want to go into great detail at the moment because we're already going it's somewhat longer than we may want it to be. Then this huge blip up. Again, 50% retracement, but that again is okay. It doesn't mean we can't just see a bit of a blip down. I mean, it would be nice to be. I think it would encourage the bear case if we saw a larger blip down here and then a final rally. But let's have a look at that in a little bit shorter term. This is the 10-minute chart. Possible 5 there. 1, 2. I said in yesterday's report that we could have seen 5 waves already, and the reason was that they had a move to there, which would be 3, 4, and a 5 up to there. So at that point it looked like it was complete, but in fact yesterday we went further. So again, the 4 could in fact be here maybe, but there should be a pullback pretty soon now. I mean, it's been a pretty enormous rally, 500 odd points. But then, that's the way markets are these days. It seems to be just it is like the traditional lunatic at the control of the elevator, really, just zooming up and down with very little. I mean, the pullbacks have been minuscule, really. The slightest pullback and people pile in again. Anyway, that's the pattern, and we have again on the Dow we have these two contrary views, which could be taken either way. But even on the Dow, have you look at it, there is this case that if this is another stopover on the way up, then it shouldn't be too much longer before these patterns come home to roost. But I say there is a possibility that we might see a major reversal this coming week, or we could see something. We could just keep it going up. I think in the very short term, the uptrend will persist, and if we see a good buying opportunity, then that's something that short-term traders may want to go for. We may do a big call, depends on the actual pattern we get, and we'll have to see how it goes around expiry. So have a quick look at gold now. Okay, well, no real change here. A, B, C, and this is just dribbling down. Because we've got an ABC there, the cases are either this is a B wave, in which case we're going to see another rally, which is possible, but it all looks corrective, and there's really nothing to be excited about with gold at the moment. Or we're going to see new lows, which again isn't terribly exciting. I think gold is best left alone for the time being until something clearer happens. We'll look at pound euro. Well, I gave pound euro as an alternative trade to pound dollar. Got a clear A, B, C, 5-wave C wave. So a nice clear pattern, and just going down at the moment. Let's have a look at that in a bit more detail. Right, a nice clear 5 waves down there. Nice clear correction here. This is a bit truncated so far. I mean, 5 waves there as well. We need some acceleration really just to confirm this pattern at the moment. Same on pound dollar actually. It's the same basic pattern. I mean, the short looks solid on this market. I say it was an alternative that I gave. But we could do with a bit more acceleration just to confirm it, because there is this possibility that this bit here is some kind of ABC. Although the longer term pattern I just showed you looks pretty cast iron. So let's have a look at pound dollar. So similar action here on pound dollar. That's a 1, 2, 1, 2, 3, 4, 5, 3 wave. This could be a 4. It's quite big for a 4. This could be a 5. So it's possible we're going to see some kind of rally come in, which could threaten this peak here. So not too clear. Again, we could do with more downside, really. I think it's really important to sort of job position, so I think most do this anyway, but to take a bit of profit here and there. So with extreme stop, you can always re-enter. This is a great thing with extreme stop. If you're having gone short around here, you can take profits around here and then just put an extreme stop in down here, for example. So it doesn't necessarily risk too much, i.e. of losing out on the position, whereas you do bag some profits, and that's I think in some cases, obviously you don't want to miss the best move, so sometimes it's but right now we have got this case that we could see the market go higher, even though I think the peak is probably in. It's just a matter of how it's going to pan out. Right, that's all for today. Hope you found that interesting and useful. I'll be back with the report on Tuesday morning. Have a great weekend. Thanks for listening, and bye for now.